The Air Canada swing trade has been a consistent moneymaker in the past, but can it do it again? Fasten your seatbelts, folks. This is going to be a good one. Air Canada is one of my favorite targets for longer term swing trades because their stock tends to experience cyclical volatility that tends to be, well, predictable. Why is it so predictable? Right off the bat, their limited domestic competition that adds a level of stability to their stock. No matter how bad things get, it it's very unlikely that they are ever going to take that final flight. When you add in economic cycles, travel demand fluctuations, and well, even the price of fuel, it helps to create periodic opportunities to buy low during their downturns and of course, well, sell high during those recoveries. Let's take a quick look at the last 5 years. And I have added in a couple of lines to the chart to illustrate those overall highs and lows of this pattern. For the most part, their overall price is swinging from about $15 all the way up to $23. And in that 5-year time frame, we've had three good swing trade opportunities. In the 0 to 100K TFSA challenge, we started an Air Canada swing trade late last summer. The rules we set out for the trade was that we would buy each month the share was less than $16, and we then set a very conservative goal to sell at $20. Well, little did we know, the recovery was about to come very fast, and in October, we sold out of the swing trade at, well, it ended up being $21. With the current economic mess, thanks to tariffs and a more than likely incoming recession, Air Canada is back into they're back into a low position, and they're primed for a new swing trade. Of course, I'm gonna take that opportunity, and I do expect this trade to last a lot longer than the last one for sure. I thought about keeping the same entry and sell points on the swing, but this time I do want to be a wee bit less conservative. So for the new swing trade, I am buying every month that Air Canada is under $17. And I'm going to sell when they return to, well, not 20, but $22. So this will be a minimum profit of $5 per share, which, and this is bare minimum, that's a return on investment of 22.72%. And just for comparison, in the previous swing trade, the return on investment for that swing trade, it came in at 27.14%. I do want to talk a wee bit about the exit strategy on this swing trade. When Air Canada hits $22, I'm not going to instantly sell, especially if they are in the process of a market recovery. I will, however, I'm going to employ some stop losses to make sure whatever my final sale value is, it is over, that target of $22. Also, as they continue to climb, I will, of course, raise that stop loss as we move along. Maybe I'll get a little bit more. Wouldn't it be great if I could get $25? A sub to the channel is the best stop loss to avoid missing future content. I do want to quickly add that this Air Canada swing trade is for educational purposes only, and you should not attempt swing trading without doing your own due diligence. Okay, with the trade out of the way, let's take a look at Air Canada and their feasibility beyond swing trading as a potential long-term investment. One thing that does have me excited for Air Canada is that in their last earnings call, they did announce that they would be buying back up to 10% of their shares over the next year. This is really good, as that does equate to some pressure on their share price to the upside. Of course, the tariffs and the anti-United States sentiment in Canada will weigh heavily on Air Canada in the foreseeable future. However, as they lose U.S. destinations, they have been seeing more European ones being added, and that will help for sure with some of that bleeding. This is as good a time as any to take a look at those fundamentals. If there are numbers involved, we need to call on the pilot of percentages, the air traffic controller of calculations, the one and only Mr. Math. We will start off with a little bit of their surface data. At the time of recording, their current value is coming in at $14.51, and they've got a market cap of $4.93 billion. That beta, you know it's going to be big because we're playing the volatility on this one, 2.44. Those earnings per share, 4.72. And they have a price to earnings ratio of 3.07. Normally, I compare this with some other companies, but we really don't have a lot to compare with in regards to Air Canada. WestJet, for example, they are not public. Their price to book ratio, 2.05. That return on equity, 108.04%. Return on assets, 2.66%. For the most part, this surface data looks fine, though that return on equity does look like it's getting skewed, and I suspect that means we have a lot of debt, which I am expecting to see in this case. However, let's dive a little bit deeper and take a gander at that cash situation. Looking at their revenue, that is coming in at 22.26 billion per year, and that revenue is projected to grow by 5.68% per year over the next 5 years. Earnings wise, 1.72 billion, and they have a profit margin of 7.73%. That free cash flow, 1.29 billion, and their operating cash flow, 3.93 billion. I do like seeing positive cash flow for sure. Let's look at that fair value. So once again, their current value comes in at $14.51. Using a discounted cash flow model, we get a fair value of $143.15. That does paint them as undervalued by 89.9%. When we check in with the analysts, oh boy, their 1 year target, $24.66. That is an increase of 50.7%. And let me tell you, that value works very well for the swing trade for sure. Once again, these are some pretty good numbers. And so far, Air Canada is looking better than I expected. I do want to add that Air Canada, they have returned to profitability. So that is fantastic. I think the last time we looked at Air Canada, we were predicting profitability to be a little further out than now. So that's a plus for sure. So let's peel back another layer and take a look at their returns data. Of course, they do not have a yield as they have no dividend. So when we look at that 3-year return on investment, we know it's going to be bad, negative 32.79%, and their 1-year return on investment, negative 26.32%. That is exactly what we're expecting. Looking at their 3-year annualized, negative 12.41%. We can see their current pain in this data very clearly, and most shareholders are deep in the red at this moment. However, it is not a bad place to enter if you are looking for a long-term play. Okay, it is time to turn that final page and take a look into their debt data. They have a total debt of 10.24 billion, and their total equity, that's coming in at 2.39 billion. So that does give us a debt to equity ratio of 428.7%. We know this value has increased in the last 5 years. In fact, it has risen from 131.4% just 5 years ago. Looking at their cash and cash equivalents, this is impressive, 6.98 billion. I like that. That is very nice to see for sure. On the short term, their assets come in at 9.06 billion, liabilities 11.45 billion. On the long term, their assets are coming in at 22.15 billion, liabilities 17.37 billion. Debt-wise, they are carrying quite a bit. But on the bright side, it is well covered by their operating cash flow, and the servicing on that debt is also well covered by their EBIT. You know, those earnings before interest and taxes. The lower interest rates are helping big time. And with the current economic turmoil, they can use all the help they can get. Nonetheless, I do believe they have the resources to chart, well, a bumpy yet safe flight to the other side of all of this tariff mess. On the bright side, one of the issues going into the pandemic is they did dilute their shares quite a bit. Well, this time around, we've got no share dilution. And as I mentioned earlier, they are looking to buy back shares. So that's a plus for sure. I do also want to add that in the last 3 months, we have seen a lot of insider buying. We have seen 71,749 shares bought by Air Canada employees compared to the 0 sold. Okay, I do think we have enough data for our final verdict. Air Canada often gets a lot of grief, but do they really deserve it? They have had it rough since the pandemic, and many investors thought they were down and out for the count. However, Air Canada has more resilience than you can see on the surface, and they have improved their position for sure. Looking through the lens of investment, they are an interesting prospect. Right now, they are down big time thanks to tariffs and all that is coming with them. It it was a huge drop after the high of their last earnings report. That's for sure. Yes, this does provide an opportunity for some short to midterm trading, and I am positioned for that swing trade, and I do have high hopes for how that turns out. But what about the long-term investor? Is Air Canada a buy? I do think it is right for dollar cost averaging during these low times. They will be fine on the other side, and that is good for your portfolio's growth. They are not flashy, no dividends or any other bells and whistles, but they could be a reliable long-term holding for sure. If you have a much shorter runway into retirement, Air Canada may not be the best choice you are looking for. They do have more pain in front of them, and it could be a few years before you may see a return. But if that works for your portfolio, they're not a bad choice. If you are interested in Air Canada, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on the 0 to 100K TFSA challenge. Thank you for watching, and I will see you in the next video.